Hey traders, welcome to this week's Forex Focus. I hope you're all doing well. You've all had a good week in the markets. There were certainly some moves there to be traded last week. What we're going to do in this week's Forex Focus, as always, we're going to look at the major currency pairs. So we're going to look at the data driving those pairs, what's affecting them recently, and obviously what their sentiment is towards those pairs so that we can get a bit of a view as to what's going to take place next week, which obviously should help you with your trading. So you can incorporate this view with your particular strategy. You don't obviously have to agree with it. It's just my opinions on the market and where I think they're going to go. Now, last week was a very interesting week. I mean, everything is still focused on the central banks, right? We're still looking at what are they going to do with regards to their monetary policy, with regards to interest rates going forward. And the markets are sort of sat there trying to get a bit of an insight as to what they're thinking. I think that last week we were able to gauge a little bit more, certainly into the Federal Reserve. The RBA as well gave us a little bit to look into to the future. So there are some interesting opportunities there. We had the testimony to Congress by the Fed Chair Powell, where he essentially said that they were looking at more aggressive rate hikes and obviously potentially more rate hikes. So it was really very hawkish, looking to fight inflation. We obviously said last month with the non-farm payrolls coming out a lot, with a lot more jobs than expected, we said that was something that was potentially on the cards. And with inflation not coming down as quickly as we would like, then I think that the markets really are starting to price that in. Next week, on Friday, we had the NFPs come out. The unemployment rate rose a little bit, which we did say was a potential, but the jobs numbers were still fairly strong. Next week, we've got some more data coming out. We've got the inflation data. Looking across here, we've also got the University of Michigan consumer sentiment, and we got the retail sales as well. So we've got really a lot of data out there that's going to give us a bit of a view into what's going to go at the next policy meeting. So the markets will obviously be focused on that. There's also data coming out of other regions of the world. So we've got in Australia, we've got employment data, we've got GDP in New Zealand, we've got the budget in the UK. So there is a lot of economic news out next week. We've also got the policy rates from the ECB as well. So we'll talk about all of that when we jump into the various different pairs. But just to let you know that the markets are focusing on that, and next week is going to be very heavy on the data front, and we should be able to get some moves off the back of it. But let's talk about the individual pairs. So let's start off with the Aussie dollar. The Aussie dollar here, we can see, has been selling off literally since, pretty much since the non-farm payrolls in February. It's just continued to sell off here. So the Aussie dollar is really affected. Let's get rid of these things that I'm just putting on the charts randomly there. So the Aussie dollar, as you can see, has been selling off. It's been very weak. And then on Tuesday of last week, when we had the RBA come out, and it was sort of a combination of a few things, actually. Obviously, we had the testimony from the Fed chair, which was very hawkish. And then we had the RBA come out with their interest rate announcement. They pretty much did what was forecasted. But the one crucial thing here, which I think is going to, put a little bit of weight on this particular pair here, and could be something that we see, as long as the US data doesn't disappoint, we will see the Aussie dollar sell off quite aggressively next week. And that is the fact that the RBA have said that at their next policy meeting, ultimately everything is wide open. So they haven't really committed to hiking rates anymore. Some of the markets are still expecting it. In fact, it's probably only 50% priced in at the moment by the markets, any sort of a rate hike. But they are saying that, potentially they could pause their interest rate hike cycle, which obviously would apply a lot of pressure here because the Federal Reserve haven't finished with theirs. Now, if you're unsure as to what I'm talking about here and it seems overly complicated, I promise you it isn't. I'll do some videos on this later on when we talk about sort of trader fundamentals. You don't really have to dig too much into the detail. You just have to have a bit of a handle on the narrative. And at the moment, with inflation, the way it is across the globe, obviously, central banks, I think I talked about this in last week's video, their focus is on price stability. So, that's what the central banks are trying to fight at the moment with their interest rate policies. So, as I said, looking at this particular pair here, I think that there is weakness. We can see from a price action perspective, we had that big down day on Tuesday. Then we had a series of days where the market tried to push up a little bit. And this is crucial here. If you look, every time the market pushed up, it was pushed all the way back down, which tells us that the energy here really is saying that the market is probably going to go lower here. So we had a big down day there, followed by a lot of days where there wasn't much going on. So it closed a little bit up, a little bit down. It did push up, but then got pushed down and ended up, as I said, not really going anywhere. So I think if we get a break to the downside here, then that's going to be a great opportunity to sell. Conversely, if we jump across to, let's go to 4-hour charts, if we do get some sort of a rally here, assuming obviously that the US data is strong and obviously leads the markets to try and price in more interest rate hikes from the Fed, then I think that the opportunity here is to sell rallies. Okay, so that's what we're going to be looking to do. Jump across to the euro dollar. So the euro dollar is a little bit different. The euro dollar here, we've got the ECB where, they still are looking to tighten. They've said as much. The only difference with the ECB and the Fed maybe is that the ECB has said that they're going to tighten, but they're really going to pay attention to the data when they're doing it. So sort of like half-half. So half of the board are saying that they want more aggressive hikes and they want to commit to hikes right now. The other half are saying that, whilst they believe that hikes are something that's necessary, they want to look at the data before doing it. But in any case, I think that really lends itself to a bit of a rally here if US data starts to disappoint. So if it disappoints, I think that the euro dollar will be one of the beneficiaries, and we potentially could get a move up towards the highs here. Of course, if the market breaks down, so if we get really, really positive US data, then at the ECB meeting later on this week, it disappoints the markets, and then we could see the market break through the lows here. But I think that that's probably more unlikely than obviously seeing the Australian dollar selling through. In terms of the 4-hour chart, so the shorter term opportunities, I think that whilst we're in this range here, I probably wouldn't do anything. I'd wait until the market breaks out to one side of the range or the other. It looks like there are opportunities to sell the market at the top or buy at the bottom, but really and truly with the way that the market is at the moment, the condition, I think that we should wait for a breakout because that's ultimately going to make for a higher probability trade. And that's what we want as traders. We want to be getting into things that potentially are going to yield us a nice return. And whilst it's in this area over here, I don't believe that the probabilities are on our side. So I'm going to wait for a breakout on either side. From a pound perspective, things are a little bit murky. I don't really, if I'm honest, I don't have so much of a view here. We've got the budgets coming out here in the UK later on in the week, so that potentially could be market moving. In terms of US data, of course, we've said for a while that we think that the pound will be one of the ones that gets hit hardest if we get positive US data and the market start to price in more rate hikes or more aggressive rate hikes from the Federal Reserve. But generally speaking, if you look at this chart here, there isn't a lot going on. So I would say that really we need to wait for the market to break the lows here at 1.1808 before we entertain anything in the pound dollar. And to the upside, I don't think we need to be doing anything until we get, a concerted move above 1.2280. So from that perspective, I would probably look at other opportunities rather than looking at the pound dollar. The New Zealand dollar is obviously correlated a little bit to the Aussie dollar, so it follows it quite a lot. We've got a similar picture here in that the market has been selling off throughout February. It is now trading below a structure level here at 0.6128. If we cast our eyes to the left here, we do have a bigger structure level at 0.6063, which was printed back on the 14th of July last year, which is what the market is playing with at the moment. So really, I think we need to wait for the market to get below that level before we look to get involved in a trade. We can look at buying from this level. Okay, so let me just pull this down a little bit. So if you can see this here, I think that if we get a nice momentum candle, nice bullish candle from this level here, and the data kind of supports that. So what are we saying here? We've got the New Zealand dollar as the base currency. We've got the US dollar as the quote currency. So to get a rally here, ultimately what we're saying is that we're getting dollar weakness. So if the data out of the US disappoints this week, okay, so for example, when I say disappoints, what do I mean? I mean, we've got inflation. So if that comes out and if inflation is lower than expected, so if it ticks down, we've got retail sales. If that's particularly negative, then that's something that we want to look at. We've got the manufacturing index, which isn't as big a bit of data there, but if that disappoints, so then obviously if we've got the University of Michigan consumer sentiment, which is actually kind of a big one because it's how the consumers feel about the economy. And if they're not feeling great, they're not going to spend money in the economy, which is obviously going to affect business. So if that data comes out next week and it disappoints to the downside, then we could see that the dollar sells off. And if this dollar sells off, then this is it's really at a technical level that could give us a nice trade to the upside. We're not talking about the market going all the way up towards 0.6536, so towards the ultimate highs here. It doesn't need to go that far, but we could take something up towards the median level here at around the 0.6366, so something to keep your eye on there. The dollar CAD, so the Canadian dollar here, as we can see, has been rallying. It's been one of the stronger ones. If we look at the dollar against the CAD, we can see that the Bank of Canada, they've paused their interest rate hikes at the moment, and they sort of recommitted to that. So really, I think that similar to the Australian dollar, if we're going to see a lot of US dollar that's particularly positive, then I think that this could be one of the pairs that we want to get involved in. Because if you think about what I've said to do with the pound, we don't really know what's going on there. The euro dollar, a little bit mixed. So the ECB could come out, and if they're particularly hawkish as well, then that's going to give some support for the euro. So that may not sell off as much against the dollar. Excuse me. And then we've got here with the Canadian dollar, we know that monetary policy obviously is very different between the two central banks. So this one here, I think that we could get some nice rallies. Now, the only thing we need to worry about is we've got the highs here at the 1.3974. But if we were to get a momentum candle tomorrow, for example, I think we get some runway up to this level. So it would be worth taking the trade on a momentum candle and then assessing when the market gets to that particular level. Ultimately speaking, highs are there to be broken. Yes, they may provide a little bit of resistance from time to time, but if the data's if the fundamentals are really driving it, if they hold and if they remain, then you will see these highs get broken, even if it provides a little bit of temporary resistance. So I think that look to take opportunities in the dollar CAD up towards the highs and then monitor what happens there. If, of course, it starts to sell off, then absolutely jump out of that position, move the stop to break even. But, at least give it a little bit of time to be able to break through here, because I think if it does break through, we could be in for quite a nice momentum move to the upside. We then have the dollar franc. So the dollar franc, as we can see, has been, it hasn't been, it did sell off last week. It's been in a little bit of a range over the past month or so, or few months, as we can see here. So this is kind of a little bit of an ugly chart at the moment. We do have this momentum to the downside, which is telling us that more than likely the next move for the dollar franc will be to the downside. What I would be looking for, though, is I'd be looking for how does the market react to 0.9059, because as we can see, this area here, even though we've got that momentum candle on Friday, this area here really has been the source of congestion over the past, since December then. In fact, if we go back to this momentum move in November, the market sold off, but really all of this price action that we can see over here, so literally since back in November, the market's moving sideways. So from that perspective, it's not to say that the pair won't move. It absolutely will at some point, but what we need to do is we need to be a little bit more cautious, because we only want to take moves and take trades when the market is moving. We don't want to sit in a trade that's just consolidating, even if it eventually goes off to pay us, because that means that some of our margin, our capital is tied up in a position that isn't moving when it could be better deployed somewhere else. And that's something that you need to think about as a trader when you're looking to get into trades. It's not just about taking the trades that are going to make you money. It's trying to figure out which ones are going to move now, which ones are going to move quickest, because what you can, essentially do is you can get involved in those trades now and then take trades like this later on when they actually start moving. You don't have to sit in it for a long period of time doing nothing. Now, the last one we want to talk about is the dollar yen. So the dollar yen here, as we can see, it did break to the upside. I took some profit on this. Well, I took all profit, took the position off the table on this particular candle here. So when the market broke up, I've been a bit of a bull with regards to the dollar yen for the past month or so now. I really thought that it was going to go further than this. I was looking for the market to get up towards 140. actually. And what happened was it gave several attempts to get up there. Then we had this move on Wednesday. So we had this sort of spinning top, as you can see here, this indecision candle, which for me, it was kind of, I felt that if we got above this level here, that the market should continue. It didn't do that. So I jumped out of my position. Thankfully, the market's obviously gone against us. We had the non-farm payrolls come out, which you can sort of see against all of the currency pairs here, where initially we got a dollar sell-off, which I think is back on the back of the unemployment rate. So the unemployment rate ticked up from 3.4 to 3.6%. But then the market started to remember what the Fed was saying about rate hikes. So we got the dollar gained back some of its ground by the end of the session on Friday. So that wraps it up for this week. Going forward into next week, as I said, we got quite a lot of data, so it's heavy on the data front there. Pay attention to everything. I think that from my perspective, what I'll be doing is I will be focusing more on the US data, because I think that's really going to be a driver of the markets. Obviously, you pay attention to everything, but what I think will move the markets is the US data, because they're going to be looking to see what's happening at the Fed meeting the week after next. So this week, obviously, we've got the data. The week after next, we actually have the announcement. So that's what they're going to be paying attention to. Okay, if you have any questions, post it beneath the video here. As I said on my last video, if you like these videos, if you want more of these videos, then please make sure you subscribe to the channel. You hit the bell so that you get a notification as and when these videos are uploaded. And if you're looking for a little bit of help with your trading, then why not sign up for my masterclass, where I walk you through my strategy, my approach. It's a 4-stage approach towards looking at the markets, towards finding high probability trades. And that's actually got a phenomenal strike rate. Okay, so I actually released this data to my community last week. If you'd like that data, then like I said, sign up to the masterclass. I'll give you all of that data. I'll show you the approach that will help you get consistency in your trading. And then obviously I'm there to answer any questions that you may have and help you in your trading journey. Okay. So thank you so much for watching. Any questions, post it beneath the video, sign up for the masterclass, and I'll look forward to speaking to you in the next video. Take care now.